Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. A reactionary bullish white soldier yesterday. Some might say it was a hammer or even a hanging man, but I'm afraid that would not be what I see. The action quite clearly showed once again the two bands of congestion within which the market is bouncing like a ping pong ball. Below is the congestion zone from August 2014 between 101.55 and 103.35, and above is the congestion area from July 2014 between 106.75 and 108.65. We ended the session sitting just on the surprising resistance offered, especially on a closing basis, by the declining short moving average, currently 104.78. Looking at the whole action of 2022, you could regard the late December 2021 to date action as a possible Big M pattern. The pattern has not yet been triggered, and yesterday's action made no difference whatsoever in either direction. So far today, continued ping-ponging market, but an interesting open lower of the short moving average and a break higher over it. Now, this is the first time, surprisingly, the market has moved above the short moving average since late June. Spot gold. An interesting, if reactionary, combined bearish dark cloud cover pattern type and bearish double pattern. There seems to be no really relevant reason as to why, other than Friday saw a first close back up over the September 2021 low at 1721. That seems very tenuous at best. You see, I might suppose it might be the approach to the overhead and rapid declining short moving average, currently at 1734, which might be a better reason, but it is still tenuous. Below, we have the middle time, currently 1707 of the April to June bearish shift pitchfork, whilst above we have the middle time, currently 1756 of the March to April bearish shift pitchfork. Yes, two bearish shift pitchforks. This brings me again to something I've been talking about since last month. You see, there is an argument for December 2021 to date action being a possible, really big head and shoulders pattern. We're past forming the second shoulder, and had until Thursday looked as if we were heading lower. If prices as a consequence of yesterday's action revert back down, then we have a primary target X below in the 1676 area, or where that interesting March 2021 low is, with a harder to achieve secondary target in the 1560 area, well below the bottom of my daily chart. Now, you may be wondering, those seem a little small to be targets for this move down. Well, I can explain that. You see, I used the April high at 1998 in my calculation rather than the more extreme March high at 2070. You see, I would rather err in caution than fail in excess. So far today, a reactionary move back up from the open, but the market faltered upon approach to that declining short moving average. Perhaps, after all, this short moving average is the reason why prices dipped yesterday. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.